Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, July 9, 2009. We begin in Australia, where the Australian economy shed 21.4 thousand jobs in June, a figure that closely matched expectations. May's job losses were revised to show a bigger 8.5 thousand decrease. The unemployment rate inched up to 5.8%, though that was better than the 5.9% forecast. The deterioration in the job market means the central bank is likely to maintain rates at a supportive level. The Aussie-Yen pair, which saw heavy selling yesterday, managed a correction of that fall, climbing 230 pips from yesterday's low to set an intraday high near 73.35. That was a 61.8% retracement of yesterday's decline from its open to its low. Currency markets saw some risk appetite today overnight, which we will show in our upcoming pairs. The euro-dollar, which is a good measure of risk appetite, rose strongly today, pushing to a new high for the week at the 1.4070 level. That was a 230 pip climb from the low we saw in yesterday's session. European stocks broke their 5-session losing streak, closing in the green, which was followed by higher stocks in the US. That helped the euro recover against the greenback and yen following a week where risk aversion had dominated currency movements. In England, the Bank of England held rates at 0.5% and maintained in its original form the plan to buy bonds worth $125 billion. The bank said that it will wait until August and the next batch of inflation data before deciding whether to expand the program. That surprised economists who had speculated that policymakers might move to expand the program in today's decision. The pound-dollar pair was climbing prior to the Bank of England statement, and it extended its gains following the release. The pair ran up against the support-turn-resistance level around 1.63, but that resistance was breached, and the pair reached 1.6380 in New York afternoon trading. The rally from low to high was about 340 pips, and it brings the pair above where it opened the week. The pound managed to wipe away its losses against the yen, as the move yesterday may have been too sharp and hard to sustain. Starting from yesterday's low, the pound rose 530 pips to test the 152.35 level, which was the price prior to yesterday's sharp slide. That brought the pair back to test a downward sloping line of resistance. In the US, jobless claims fell by 52,000 in the week ending July 4th, falling to 565,000, the lowest level since January. The news was much better than expected, but had to do with early automotive plant closures, which altered the timing of layoffs that typically happen around this time. Still, the total number of people continuing to collect unemployment benefits for the week ending June 27th rose to 6.88 million, an increase of 159,000. U.S. wholesalers ran down in inventories by 0.8% in May, the 9th straight month that inventories have dropped. An increase in sales of 0.2% helped distributors get rid of some of their excess supply. The decrease was less than expected, but still the continued drawdown of inventories can set the stage for a return to growth, as firms will have to place new orders to replenish their stockpiles. The greenback rebounded against the yen from its fall yesterday, though it did not manage to wipe away all of yesterday's losses the way the pound was able to. Instead, we saw a 50% retracement of the most recent decline, which we are measuring from Tuesday's high to yesterday's low. In Canada, housing starts grew at an annual rate of 140,000, a better than expected figure. The report from the Canada Mortgage and Housing Corporation said that the increase in starts was broadly based and that starts are expected to improve throughout the rest of 2009. The US dollar-Canadian dollar pair fell from its 7-week high as higher stocks and commodity prices boosted the sense of risk appetite in the pair. From yesterday's high, the pair slid about 170 pips to test the low for the week at the 1.1550 area. From there, the greenback managed a small counter rally. Price action this week is developing into a tighter range than the one we have been seeing since June 24th. Tonight, Japan will post its corporate goods price index, a measure of inflation for Japan's companies. Overnight, Germany releases its wholesale price index, while the UK will unveil its producer prices. Tomorrow, Canada releases its employment figures for June, along with data on housing prices and trade. The US finishes the week off with its own trade statistics, its import price index, and the UMich Consumer Sentiment Index. And that wraps up today's video recap. Thank you for joining us here at cmsfx.com, and happy trading.